Honored guests, Bajans all, it really is a great pleasure for me to be with you this weekend. Warmth of the welcome, the beauty of the place, the surroundings. It's all a nice occasion for a weekend. I must say my satisfaction was increased further by the fact that I could get away from New York and get away from all the arguments about financial reform and even the Vocker rule for one weekend anyway. Of course, even here you can't quite escape what's been going on in the world. Barbados, I think, has managed better than most during this difficult period, but it has indeed been a difficult period for the world economy. And I thought my function this evening would be to rely upon the one comparative advantage I have over almost everybody in this room. I am 85 years old. I'm very conscious of my age. And I must say, when I look around at all the problems of the world and all the things I should be doing, somehow we got to make this world better, I think, oh, to be 80 again. But I've been in public life in the United States, to some degree internationally, for almost 60 years. And when I think about it, I'm reminded about how much has changed that's relevant for the problems that we have today. You know, when I started out as a young man, not long after World War II, the United States was the great giant in the world economy, great giant in other respects as well. I think 40% or more of all the gross national product in the world was American, population then of 200 million or a little more, accounting for more than 40% of all the world's production. That's no longer true. We still hold up our end to some degree, but down around 20%. But something's happened that seemed unpredictable even 20 years ago. And that's the rise of the so-called emerging world. You know, back when I got in this business, they were the underdeveloped countries. And then to be more polite, the term was changed to developing countries. And then more recently, they're the emerging countries. Well, the emerging countries have substantially emerged. And today, the so-called emerging world accounts for half of all the production in the world economy. They have grown up to the point where not only they can't be ignored, but they must be full partnerships in the way the world proceeds. So we've had a big change in the center of gravity, but I'm not sure there is a center of gravity anymore. It used to be the United States or maybe Europe. It's not quite China yet, but within 10 years, China's economy will be bigger than the United States. Of course, they have a billion people to go along with it, but nonetheless, it is going to be the heavyweight in the world economy. Then what else has happened in these 60 years? Markets have been open to a degree that has never happened in this world economy before. That's true of trade. We had a lot of free trade for a while, 100 years ago too. But what is really open in a way that's never happened before is world financial markets are all interconnected. Money moves fluidly right around the world. It's not a matter of policy. It's been pushed a bit by policy, but it's a matter of technology. You cannot stop it. In the world of iPhones and iPads and all these other things I don't know about, I barely can handle an iPhone, but I do know that the world of finance is truly international. And when we think about the world of finance, the other big thing that's changed is how complicated the world of finance has gotten to be. A lot more complicated, and in the process a lot more opaque, and I must say a lot more risk-prone. We just repeat some of the figures that I still find, even though I've been in this area for a long while, almost incomprehensible. There's something called a credit default swap. Credit default swap is an arrangement where somebody can protect against a failure in securities that he might own, a kind of insurance policy against particular securities. Simple concept, very complicated in practice. It was only invented about 15 years ago, only invented 15 years ago. On the eve of the financial crisis in 2008, there was $60 trillion worth of credit default swaps outstanding. 60 trillion is a big number. But what makes it particularly interesting is there was 60 trillion of credit default swaps, presumably providing insurance against securities that in total were only $6 trillion. So when the insurance policies were 10 times the amount of what the insured is, you begin worrying about what the complications were and how much trading there was. I was told the other day that so-called derivatives, including credit default swaps, including interest rate swaps, including fancy foreign exchange swaps, I mean, these numbers just get unbelievable. The total number of derivatives in the world are $700 trillion worth. Again, this is a reflection of the complexity, the complications, and the opaqueness of financial markets. So put that all together, and I think we have a challenge, certainly in finance, but in the world economy, that's greater than any time I can recall in my lifetime. Now, there's a tremendous progress in one important direction. It is literally true that in the last 20 years, hundreds of millions of human beings have been lifted out of poverty and into participants in the real economy, in many cases the world economy. Hundreds of millions. Now, the biggest portion of those are in China. China's a big country. It's also true in India, but it's true in Brazil. It's true in many other emerging economies. And very few people would have predicted that degree of success in so limited a period of time. But there's another side of it too, at least when you're sitting in the United States, tremendous increase in incomes, escape from poverty around the world. Well, in the United States in particular, things have kind of stood still. There has been no increase in the average income of average American families for 15 years. That's not supposed to happen in a growing world economy. You know, productivity increases. The whole theory was it would be spread through the economy, through the population, through all workers, and that's been the story of history. It's not the story of the last 15 years in the United States. And it helps explain some of the political tensions that you may have been hearing about in my great country. If we look beyond that change in, or lack of change, lack of increase in incomes for the average family in the United States, there is a small sliver of people at the top who have had a very, very large increase in income. The top 1% accounts for 40% of all the increase over the past 10 years or so. The top 1/10 of 1% accounts for 12% of all the income in the country. The last time we had any income distribution or maldistribution of that sort, interestingly enough, was in 1929. And that may bring up some thoughts of what happened after 1929. And here we are, and not in a deep depression, but obviously in difficult economic circumstances. And what's happened in these years is we have had very large imbalances in the world economy. The biggest single one you know about. The United States likes to consume. We don't like to save very much. We spend a lot on consumer goods. China produced it. I use China symbolically for all of Asia. We bought a lot of stuff from China, and we paid for it by selling them treasury bills. So they now have $3 trillion worth of dollars and other currencies, and we have a lot of consumer goods that we probably mostly used up, and left ourselves with some very large debts, particularly in the consumer area. You talk about financial complexities and financial engineering. That process was all fostered by the fact that our interest rates are very low. China and other countries were lending us money at very low interest rates. That stimulated some people to create mortgages on easier and easier terms. Prices of houses went up, became a speculation, kept the economy going for a while. But in the end, as you know, that boom came to an end, and so did prosperity for the moment.